Good morning, everyone, and how are you doing today? I welcome you to another video tutorial on the USDJPY. Like as usual, I will be taking you through my thought process on what my expectations are on this pair in the coming week. And it's very important I state here that this is a follow video to my previous analysis where we were able to make over 700 pips thereabout as we had multiple entries after missing out on this sell move that happened on Tuesday of last week's trading session. So for those who would like to have a peep into the daily commentaries on how we took advantage of those positions last week, I will be sharing the link to that video in the comment section. So as you can see here, this is how we took advantage of all the trading opportunities we had last week. And here you are with the daily commentaries on how we took advantage of those moves. Before we missed out on this bearish move to the downside that happened following the prior to the FOMC, but we were lucky enough to catch the buy opportunity that came afterwards. I think somewhere around here, yes, above the 135.3, which we anticipated here, and we rode that move all the way up. So if you want to have a look into that, I will be dropping the link to that daily commentaries in the um, detail box below. So with that being said, let's dive into the chart right now. And the first thing we are going to be looking at is having an holistic view of what is really going on in this market. Now we are on the daily time frame, and it is obvious that price action has been very bullish since the beginning of the year, and this is evident after connecting the series of higher lows to give us that bullish trend line. However, there is an important structure at the 135 Japanese yen level, which is an area I have laid much emphasis on in the last couple of months. And this is how it all started. It started in the month of August when we identified that reversal pattern in the form of a double bottom structure. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify a neckline area for that structure, which we shall be using as a yardstick for trading opportunities. And that was identified at around the 135 area as the breakout of that structure formally confirms that this is a reversal pattern. And as a matter of fact, it took about 3 to 4 months before price action came back to do a retest of that structure here during the later part of the month of November. And since the beginning of this month, price has been consolidating between the 138 Japanese yen level and the 135 Japanese yen area to emphasize the indecision in this market. Now, if we take a closer look at this current structure here and taking into consideration that bullish trend line, which I identified earlier, you will see here during the mid month of November, the bullish trend line was broken to the downside. And from a technical standpoint, there is a tendency that price might likely come back at one particular point in time to retest that structure with the hopes of another wave of bearish momentum to the downside. Or if the contrary is what happens, that is a breakout retest, then the bullish momentum could be taken advantage of from there. So now with the retest of the 135 Japanese yen level, a level which was broken in the month of August, price action has come to do a retest of that structure. And if you look at how price has been relating to the 135 Japanese yen level in the last couple of weeks now, you can see that every time price comes within the 135, we have been witnessing buy pressure coming in from that area to further give us a clue that there is a strength of buyers at that particular point in time. Now, with the current structure we have here, this is more or less looking more like a reversal pattern following an impulse leg to the downside. But we will not jump into conclusion yet because this is just a proposed reversal pattern, as a reversal pattern will only happen if a breakout will only be confirmed if a breakout of the 138 Japanese yen level happens, where we want to be looking out for buy pressure right around that structure on our lower time frame to join that move to the upside. So you will agree with me that we are at a very critical point in the market right now where price is within the structure here, selling pressure there, and buy pressure around the 135. So in order to have a better understanding into what is really going on here, at least in the last couple of weeks, we want to be scaling down to a much lower time frame where I will be showing you the simple setup I was able to identify here, and we shall be using this as a guide for our trading activities for this week. So right here on the 4 hours time frame, the first thing you would observe here is that we have a bearish momentum, and as a result of this, we were able to connect the series of lower highs here to give us that resultant bearish trend line that you can see on your screen right now. Now, in addition to the trend line, is a very important structure which I showed you on the daily time frame, and that is the 138 Japanese yen level, which at one point in time during the mid-month of November stroke the later part of the month of November, this level was holding by pressure before it was finally broken on the first of this month. So right now we can see that every time price comes back into the 138 Japanese yen level, we have been seeing selling pressure at that area, negating all attempt by the buyers to push price above that structure. So as we head into the new week, what are the things we are going to be looking forward to here? Well, I have a bullish trend line here, which I will be calling a temporary one at this particular point in time, considering the fact that we are on a long term bearish momentum here. So, as a result of that, I drew this trend line. So, I am hoping, considering this higher low here, that price action might likely go to the upside. And this will be evident if we have a final breakout of the trend line. That is, the trend line is no longer strong enough to hold bearish momentum. And if we are lucky, we have um, the breakout share a confluence with the 138 Japanese yen level, taking out all the sell position here to give us a signal that buyers are now stepping into the market. And if we start seeing buying pressure right above the structure, we want to be thinking of joining or adding more position to our existing trade. However, if price breaks down this trend line, which also shares a confluence with the 136 Japanese yen level, followed by selling pressure below that structure, I want to be thinking of selling the USDJPY. So these are my views here on the USDJPY, and you will agree with me that we are at a critical point in the market right now, as we need to be very patient to see how participants in this market will be relating to the 136 and the 138 area during the early hours of the week before making any decision. But rest assured that I will be jumping in the comment section as usual to give you an update of what my expectations are after monitoring how participants in this market will be relating to the current structure we have here during the early hours of the week. I hope this video has been of help in making your personal decision on the USDJPY. And if it did, kindly support this project by clicking the like button. Don't forget to follow me on my TradingView platform at Dark Sherry, spelled DARCSHERRY, so that you don't miss out on the regular updates I normally share on all of my videos. Thank you for watching and do have a wonderful day. Bye bye.